Okay, so welcome back everyone from the break. So we're going to continue now with learning unit 2. So we've discussed how to calculate your non-current assets, your current assets, your non-current liabilities, current liabilities, and owner's equity. This is very important. They love asking this in a test or in your assignment. So please be aware how to do the calculations. And remember, like I said, and I'm going to repeat this multiple times so that you guys can remember, is please show your calculations or how you got to the answer. So that in the event that you make a mistake, we can still allocate most of the marks to you, which will help you pass the question rather than fail it. Okay, so the last part of it was just the definitions and the concepts. Now, you guys can just, in your own time, go through the textbook. Okay, Tumelo, I'll explain it now. I just want to finish it. In the textbook, so you can just write down the page numbers. So the asset definition is on page 24. The liabilities definition is on page 26. And then your income and expense, they explain it on, okay, income and expense is on page 37, and they give you examples. And then your equity is basically, let's quickly see where they discuss it. On page 35 and 36, they talk about the different components and then they conclude what equity is in essence. Okay, so Tumelo asked me to explain what a cash float is. A cash float is very similar to petty cash as well. It is money that you have on hand to use for a specific thing at the end of the day. So it's similar to a bank as well, but cash flow, okay. If your pages differ, then it might be because you have a previous edition, I'm assuming. Then you can just go in chapter 2, if you go to the first page where they break it down, they will give you the specific elements. So under assets and liabilities, they will discuss the assets and liabilities definition, and under proprietary accounts is where they will discuss equity in your textbook, and profit is where the income and expense will be. Okay, so if you've got different page numbers than what I've given you. Okay, so just to get back to the cash flow, so it is in essence money that you've taken out of the bank. So it's physical cash that you have on hand that you're going to use for a specific, it depends on what the business decides they want to use it for, but you keep it for a specific purpose and then you will spend that cash. So it's very similar. Another name is petty cash, where you have a little box with cash in it and small expenses get paid out of it. So when we talk about petty cash, cash float, bank, it's all some type and form of cash that you've got on hand. Okay, Tumelo? So just remember that. Okay, so let's move on. How do we show a business wealth? Now, when we look at a business wealth, we talk about a business net worth. Okay, so net worth we said is the equity. Now, for a business specifically, there is a business entity rule. Now, that is specific to a business, and the rule states. Now, if you go to page 30, they talk about your business entity rule. That rule says that according to this principle, the books of account should not reflect the personal affairs of wealth of the owners outside of the business. So what it basically means is you only show the wealth or the equity inside the business. So only the money in the business. You do not look at the owner outside of the business. The owner outside is a separate legal entity. So you just look at what money they've physically put into their business when you work out the equity for the business. Now, last year they actually asked a lot of students to explain this business entity rule. And the way they've actually approached this is they gave you a scenario that said this lady started a business and she pushed 200,000 out of her personal bank account into the business, and then she had additional income as well, an additional bank account. And then they wanted to know, when you work out the equity of the business, do you include her equity or her money that she has in her separate bank account in as well? And then students were actually required to talk about the business entity rule that states that the general principle states that we only show the wealth of the owners with inside the business. You do not look at their personal accounts outside. And a lot of students actually miss this concept. So that's why I wanted to highlight this today, is the fact that when we talk about a business work, it's only the capital that that owner has physically deposited into the bank of the business. It does not refer to any capital of that individual outside the business in their own personal capacity. So that is just something important to remember. Okay, so our next group activity, we're going to do it in a group. I'm going to divide you guys in groups again. In these groups, you are allowed to put on your mics and chat to one another or type into the chat functions, whichever you prefer, to try and get to an answer. So the question is on page 35. Also a tip, use your chart of accounts on page 50 to assist you. Those are the account names, and it also shows you under what category they are, because I know a lot of you that have not done accounting before, it's still a bit of a foreign concept. This is unfortunately something you need to learn and study. So for this exercise, please use page 50 to help guide you where you should allocate that information. Now, what you have to do, what they've asked specifically, is Roger Pierce commenced business as a sole trader on 1 August 27. At this point, he only had 40,000 in the bank, being 10,000 from his personal funds and 30,000 from the bank in the form of a loan. Roger entered into the following transactions during August. So there's 4 transactions that you need to discuss. The first transaction took place on the 2nd. He cashed the check from 2,000 Rand, being from petty cash. On the 7th, he purchased merchandise, which is trading inventory, by check for 11,000. And on the 21st, he purchased office equipment on credit for 12,000 Rand. And on the 31st, he redeemed. So he paid 3,000 on the bank loan. So now they want you to calculate the equity in his business, but you have to show the effect of each of these transactions in your accounting equation. Okay, so I'm going to show what the accounting equation would look like, and then you can do it in that format. And I'm going to divide you in groups, 2 groups, and then you can discuss in your group what you would debit, what you would credit. So do you put it under assets? Do you put it under liabilities? Do you put it under owner's equity? And then I'll pop in and out of the different groups. So if you've got questions, then you can ask me as well. Okay, so let's quickly divide you into your groups.